I think we're live. Okay, perfect. Oh my God. After all these like situation. Anyway, I'm so glad you're here. Okay, so Ernie, welcome to Venture with Grace.
Thanks for having me.
To start our show, I would love for the audience to get to know you a little bit more. So you actually started your career in Deloitte, and then you have worked for the U.S. Air Force, and then you were the COO of like Defense Innovation Unit Experimental, and now you're managing director of Forgepoint Capital, which focus on security, Series A and B. Maybe we could start with like what were some early stage like lessons that you've learned early on in your career kind of shape you into who you are today?
Yeah, well, if we could maybe take a step back, because I have, I got into venture very, it found me. I didn't choose venture, and I know there's probably a lot of folks out there that are like, "Hey, is venture a career I can get into?" I started my career as a fighter pilot in the military, and did a bunch of things prior to that in the private sector as well as the public sector. But when I was in the private sector, I was at Deloitte Consulting, then I was at a startup. I was able to, as a military reservist, go to U.S. Cyber Command, and that's where I kind of got the passion and the interest in cybersecurity. And through that chain of events, I moved out to California to help stand up the Defense Innovation Unit Experimental, which at the time, and they're still doing this, they have just a much larger budget now, trying to bridge the gap between startups and the Department of Defense, essentially. So whether it was cyber, AI, autonomy, you name it.
Mhm.
And after that, where I ultimately was the chief operating officer, I was just going to a large tech company. That was the plan. And then I met both of the co-founders of Forgepoint, and they convinced me that I should give venture a shot. And that was about 7 years ago. So usually, you either come from an investment background in private equity or investment banking, or you're a successful entrepreneur or operator, and then there's kind of everyone else, and I'm in the everyone else bucket coming in.
Love that. I wonder maybe we could start with Forge Point Capital. So like I know that you guys are security focused, and then maybe
Mhm.
we could talk about like, when you guys are looking at like Series A and Series B companies, like maybe we could start with like the general like um portfolio construction, like how frequently do you invest in them and like what's the check size? And then we could talk about like the investing trends as well.
Yep. Yeah, so Forgepoint Capital, we've been around for almost a decade now, a little over a billion AUM, investing globally,
Mhm.
and everyone in the business knows us as focused on cybersecurity. As you can imagine, as technology has changed, and I'm sure we'll talk about AI at some point, it's really investing at the convergence of cybersecurity, AI, and infrastructure. And for us, the typical entry point is Series A, plus or minus. We'll come in, we'll do Series B on a case by case basis. We'll look at C, but Series A is what we like and probably do the best. And when we do those, we like to lead or co-lead and write checks anywhere from 10 to 20 million, as well as reserving capital as companies progress. And they're doing well. We like to maintain our ownership there, and also being active investors. So you know we ask, it's almost, we don't ask, it's more mandatory for a board seat and an observer seat, and we do the work between the board meetings. Board meetings are formalities. So many of my companies, we have monthly strategy sessions, as well as texts, phone calls, Zooms throughout the quarter, to help make introductions to chief information security officers, security practitioners, you name it, to really help the company. So we think of ourselves more as company builders, as opposed to just kind of picking stocks and hoping everything works out.
Mhm. I wonder maybe we could talk about like, the different security areas. So nowadays, like I feel like there is AI in the security aspect of it, like or like I guess like security companies that's like adding AI into the component, and then the other part is like AI created a bunch of like security problems that like the security tools are solving these like AI problems. Maybe we could start with like, in the security space, like what are some major trends that you're seeing? Maybe we could use like some of your portfolio companies as an example to like chat about like how you find the company, to like how you diligence them, and how you think about like winning the deal and potentially exiting.
Okay, a lot to unpack there. So, what we're seeing in the market, and for folks that are already investing in this space, it's no surprise. But the two broad categories are security for AI and
Mhm.
AI and security. So I can talk about both of those. So security for AI is, the category is maybe 3 years old, and quite interestingly, over the last few months, there have been a lot of exits. So companies like Protect AI going to Palo Alto Networks, companies like Lakera being bought by Checkpoint. So these are all Gen 1 companies that are really doing, it's more of a governance focus. So cataloging the AI apps, tracking and analyzing usage, making sure data is not, you don't have sensitive data being brought into the wild, and models being trained on it. So that's a critical category for enterprises, large enterprises, you name it, really down to SMB. And that's a category that will keep progressing. We're in a company called Witness AI. They fall in that category. But there's plenty of other companies out there that are doing security for AI. And that's a critical piece. That's something that the CISO is reporting to the board on. The other bucket is AI and security. Did you have a question?
Oh, I was gonna so like I just opened the security. Yeah, like I'll let you finish. So I like opened the like a security like market map, and then I wanted to like maybe we can dive into some of the more like subject expertise stuff later. Sorry. Keep going.
Okay. So as far as AI in security, there's no company. I talk to a lot of companies each week, like NAVC, and they're all AI native. And that is letting companies do things really faster, better, cheaper. You have less people getting to more ARR quickly, more quickly than historically. That being said, on the other end of the spectrum, there's a lot of companies that were founded well before Gen AI became a thing, right? So these companies need to, and like if I look at our portfolio, we've been doing this for 2+ years now. And we have a pretty seasoned AI expert as one of our venture partners, and making sure that all of their roadmaps have Gen AI, because at the end of the day, it helps their offering, but also now these older companies are competing with the AI native companies. And there's a lot of categories here, like in security, automated SOC, security operations center. That's been a huge one where there's a lot of companies, they're leveraging AI for those tier 1, and even to a certain extent tier 2 and 3 analysts within the SOC. And then if you look at other categories like pen testing, there's a crop of companies popping up that are focused on whether it's fully autonomous, human in the loop, human on the loop. But and the list goes on. So there are new categories, but there's also a lot of traditional categories within cybersecurity that are just getting reinvented, if you will, with Gen AI.
I was on like a YCF party this weekend, and then I met like a pen testing startup. I thought it was really interesting. And then I felt like, on our podcast, we have some like security experts, for example, the founder of like Horizons 3. And I feel like that's definitely a popular area. Maybe we could I want to like showcase this map. If you have a better map, please like feel free to share.
Okay.
God, where is this window? Oh no. I feel like just give me one sec. Let me just open this on Chrome. I don't know what will happen in my
Yeah.
So maybe we could talk about like, the stuff that are like,
I mean, the other, while you're bringing that up, oh, there we go.
oh yeah, sorry. This is like a
Yeah.
like mental security roadmap.
Yep. Yeah, I've seen this before. Yep.
Maybe we could talk about like, so for example, in all of these space, like can you give us like a kind of like evolution of like what is happening? So you mentioned about like I think like, we just chat about like you mentioned about like there's like the um AI for SOC, like or like automated like SOC, and there's like different aspect. Like maybe if you are picking the top three security aspect, like let's talk about like how the money flow, like who is actually buying these security products at what kind of companies. Is that like so? For example, you mentioned like there's some acquisition in like Palo Alto Network acquire something, but that's like bigger security companies acquire like smaller security companies, right? So how do you think about like so first of all, like what is like some companies that's um like making the most money in the security space? I feel like people heard about like Whiz or like some other stuff that are like very large scale deals, but like how does the money flow in the security space? Who is buying the software? And I guess like what are some steps like what does the sales journey kind of like look like for a security company?
Okay. So let's take a step back with cyber, and I'll talk to this for folks that are not in cybersecurity.
Mhm.
It's one of the more unique categories because you have an adversary, a very motivated adversary at the other end. It could be criminal organizations, nation states, etc. And so it's this perpetual cat and mouse game that will go on in perpetuity. And just when we think we're getting a handle on it, Gen AI camp comes out, and you have to look at the evolution of the threat landscape. Right now, tools are becoming more advanced on our side, on the defender side, but also on the adversary side. And adversaries don't have to deal with regulation. They have really no handcuffs on them.
Mhm.
And there's also a component where the attack surface is growing. So with adversaries, you've seen using Gen AI, you've seen the phishing emails get a lot better. I mean, I've gotten some where I'm just, I'm not even sure. You have phishing, you have vishing, which is voice phishing. So that has become very successful. And think about as deep fakes, whether video, voice is where there's issues right now. It'll translate to video and images later, but that's all. Imagine a call center. You're getting deep fake calls coming in, and most adversaries, if they can get user credentials, they can just log in and then move laterally and do their business as opposed to hacking in. So the net of it is the adversary tools are getting more advanced. The barriers to entry for adversaries is getting lower with Gen AI, and the attack surface is growing. So as defenders and organizations that CISOs run, they also need to leverage AI. They need to up their game on the tooling. And there's some new categories that are popping up that are more focused on looking at the entire external attack surface, looking at resiliency, looking at how do I have 40 tools in my security stack. Am I using them optimally? Can I tune these? Can I get rid of some? Do I need new ones? And then there's another aspect of moving from point solutions to platforms. Most CISOs are gonna leverage platforms when they can, but for cutting edge new problems, more than likely they're going to leverage a startup that is a point solution to deal with that time critical problem. The other aspect of security as well is it's about trust. So historically, the sales cycles are a little bit longer, and we see this with our entrepreneurs, and it's really with any vendor startup vendor in the space. Is they need to build trust with the CISO, with their team, with the SOC, with the head of the SOC, in order to really consummate a sale and get their foot in the door. So things take a little bit longer, but it's an industry built on trust. And you're showing some of the like data security, app security, security ops. These are all categories that have been around for a while. Even with cloud security, that's probably a 7-8-year-old category at this point. But to my earlier comment, a lot of the companies that have been in these spaces are rebuilding or modifying their products to leverage AI, and the cloud and the AI native companies are just coming right in and competing against them. And again, we're seeing this across the board, whether it's in data security, in the SOC, in identity, in cloud security, app security. It's across the board.
I have a question on this. So, like, how much are people spend on stuff like pen testing? Like, and then is that like, so I'm sure it's like in the billions or something, but like the thing is like, who is spending the money? Is that like, for the best security company, do you feel like they're selling to, let's call it like 3 big techs, or like, are they selling it to like traditional companies like, I don't know, Adidas or something like, or I guess what type of companies do people typically sell for? I feel like whenever I chat with the early stage startups, like they're trying to sell to everybody, and then especially the banks and stuff. But the problem is like, I think a lot of VC came out and said like, bank is like the worst place to sell to because of like, it takes forever to sell to something like a bank. So maybe we could talk about like, if you're like a founder today, you're building a security startup, like what do you even put on your deck as like a TAM? Like, and then what should they put, I guess, like, yeah, what is a TAM, and then how much money are actually in each of the subsector, like the application or like data security or like security operation or identity management? Or basically, I think the 2 category that you mentioned, it's like one is a deep fake, or like how do you solve deep fake, and then one is kind of like trust related, and I guess like how much money is flowing into which category, basically, roughly.
Okay. So I don't have the specific numbers off the top of my head, but let's talk about if I'm a founder in security, where most of them migrate to first is enterprise. And, some of them will focus on regulated industries, financial services, government. Those are extremely long sales cycles. You're competing against incumbent and legacy players in those markets, and it's very difficult. But if you get in, you can land very large contracts. Others are more focused on the mid-market, and it really depends how you define. A lot of different startups define mid-market differently. It could be based off revenue, headcount, etc. But with the mid-market, you have companies where they have security and IT that are internal. They may be leveraging things like MSSPs and providers like that to help augment a very small security team. But some of them are very sophisticated and have decent budgets. Those are shorter sales cycles. And then on the bottom end of the spectrum, you have the small, medium business, which is kind of the long tail of businesses. These are organizations mostly serviced by MSPs that are leveraging companies like my company, Huntress, in order to provide different things, whether it's endpoint detection and response, identity threat detection and response, you name it. So that's how I broadly look at it. What I see founders doing, they try to sell to all 3 plus the government. And, part of it is you go where there's traction, and you're kind of boiling the ocean. I prefer when, I met with a company yesterday, they go, no, we're doing identity specifically for the mid-market. Here's the ICP, here's the size of companies, and this is why we can win in this market. That's what I'd like to see. I'd like to see more of a laser focus as opposed to, we can service the SMB and the enterprise, because very different buying behavior, different sales cycles, different budgets, different level of sophistication. And it really, you can't have an SMB product that immediately you can sell to a JP Morgan. It's just not going to happen. So that's kind of how we look at that. As far as the TAM goes, that for those categories you were showing, data security, app security, cloud security, all of those are major TAMs. And the one issue that startups have is that when a new category emerges, you immediately have multiple companies. Some of them may be a lot of them are in stealth, but you could have one company out of Israel. Next, a week later, you have 5 more. You have companies in Europe, North America, and all of a sudden, within a short amount of time, this is what happened in Gen AI security, especially in the first generation, is all of a sudden you have 50, 75, 100 companies, and it's really hard to differentiate to a potential buyer why they should buy you versus your 50 other competitors. So it gets very complicated very fast. And usually in certain segments, you'll see 1 or 2 or 3 companies that break out. It's usually companies that raise the most money initially. But there's this thing within cybersecurity, we say there's a first mover disadvantage. If you're the first company in a new category, you need to raise money so you can educate the market. And I talked about building trust with the CISO and the security team. It takes time. So if you're a first mover, but then you have these fast followers that kind of, or they're moving in your wake, if you will, they're able to leverage all that brand and awareness that you've spent money on. So a lot of times, look at Whiz, probably the largest it is the largest cybersecurity exit, maybe the largest startup exit ever. And they were not first to the game. They came in a little bit later after there were several established players, but they had an uncanny ability to understand the buyer, what they needed, how to get fast time to value, and build an amazing product and ultimately a platform. So they weren't the first ones, and we've seen this in many other categories.
I have a question on this. So do you feel like so when you mention about these 3 type of customers, like the big enterprise, and then there's a mid-market, and then there's like this SMBs, for security companies, should, like you mentioned, you like when they have like a specific focus, like I don't know if this happened in the security category, but I feel like I see in the general SaaS landscape, a lot of people are just selling to, they're like, hey, we'll use one product specifically as an entry. Let's say we're doing a marketing AI company, and then entry into a company, and then start selling to across the board. We're doing marketing, we're doing go-to-market, we're going to sales, blah, blah, blah. So basically they built a ton of features or other stuff to sell to the same company. Do you think that happens in the security space? Let's say I start with pen testing and then branch out to SOC, branch out to other stuff. Is that happening in the security space, or do you feel like it's more of very specific tool-based stuff?
Yeah.
And then I have a second question, but I don't want to overwhelm you with a bunch of stuff.
Yeah, so land and expand is a very typical motion within security. So think if you're doing app security. So, it's amazing. Some of these large companies have thousands of apps. Some are mission critical, and then there's a long tail that maybe aren't. But you would land in those mission critical apps because that's what the company really cares about, and then try to expand to the broader app base for that company. For pen testing, same thing. Whether you're pen testing apps or networks, you may start small, and then again, as you build trust, and you're able to, you start expanding there. Within security, especially at the earlier stage where we come in, what I say is every company is a point solution until proven otherwise. Point solution, they essentially do one thing really well. And we've seen this within our portfolio, it takes time to go from a point solution to start building a platform. If you have a platform, to your question, you can land in one of the SKUs, one of the modules, and then expand to the others. If you look at public companies like CrowdStrike, I don't even know how many modules they have today, 30 more. So they're able to, I mean, they have a large percentage of customers on 6, 8, 10 modules, and you're able to do that cross-sell and upsell. And that's how you build big companies. As a point solution, you could only go so far at the end of the day. That's kind of how we look at it.
I wonder, so like when you were looking at like you mentioned about like AI, you mentioned about like Whiz not being the first mover in the space. Like, what do you feel like set them apart? You mentioned like they have like a really unique strategy and stuff. Like, what is their strategy, and then why do you feel like someone who is not like a first mover can go into a space like this?
So I don't, unfortunately, I wasn't an investor in Wiz, but would have been nice. But so I don't know the specifics. But what I understand is, you had all these initial Gen 1 cloud security companies that came in.
Mhm.
Some were bought. Palo Alto bought one or two of them. So a bunch of them were bought. Other ones kept going. But when you're someone like a Wiz and you go in to talk to the CISO and their team, you find out all the issues. What Art, you have a cloud security solution. What's not working? What's wrong with the UI, et cetera, et cetera. And then you are able to build a product and ultimately a platform that addresses those. And if you're a CISO, you have to have a cloud security. And I don't want to go into all the specifics, but it started with what we call cloud security posture management. Hey, what's going on in my cloud? And it's really been built into this. It's a Gartner acronym, but something called CNAP, which is like an amalgamation of all these cloud security things that have been put together. And that's kind of the latest instantiation of that. But again, that first mover disadvantage, you have to educate, you have to make those mistakes, and the companies coming in behind are able to leverage those and get a faster time to value, solve the problems the CISOs really care about. And it doesn't always work that way, but there's plenty of examples. Wiz is obviously the ultimate example of that situation.
I wonder when it comes to like, I guess like, um, maybe we could talk about like, some of your portfolio company like Huntress. I think Casper from Sapphire is also an investor in this.
Yes.
So it's
Yep.
our past guest. Maybe we could talk about like, how do you meet the company and then how do you kind of like diligence it to thinking
Yeah.
about potentially like, yeah, I guess like winning the deal and then thinking about potentially like exiting and stuff.
Yeah, what I say and what I've learned in this business, and again, we come in Series A plus or minus, so we're not pre-seed. We're not like where you're just investing in two guys and a dog, but it's still it's a people business and it's about relationships. And I don't care how good a company looks on paper. If I don't have that relationship with the founders, I'm not investing. So people don't realize that because the later stage investors, you come in like super late stage, pre-IPO, like that type of stuff, that's transactional. In the earlier stage, it's all about building relationships. So yeah, Casper is with Sapphire is a co-investor of mine in Huntress, and we led the Series A. They led the Series C, and that's a company I was introduced to the founders. I have a military cyber command background. Two of the three founders come from the Air Force and the Navy, and were nation state hackers at the NSA. So we had mutual friends and ecosystem there. But it was really, spending months building a relationship and being able to show value to them, and ultimately, getting to a term sheet and then helping to build a company over time. But it's, the last thing as a VC, the thing I don't like is company comes to me, hey, we already have half of the round filled. Let's do one call. Are you guys in? That just 99% of the time will not work. It's about people, because at the end of the day, you come in at the Series A, for instance, and in Huntress, they're post Series D now, and doing really well. But it comes down to the people, and it comes down to their ability to execute. There's a lot of other factors with the technology, timing of the market, competition. We can talk about all that stuff, but at the end of the day, it comes down to the people that start the company and how well they're able to execute despite, many odds against them over time.
Hmm. I wonder, so like when you were looking at you mentioned about like you had like mutuals with these people, and then like what separate them apart versus like other people who meet the same kind of like benchmark in terms of like sales or metrics when they hit like Series A, like what separate them apart? And then also what is a good benchmark for a Series A company? Like how much revenue should they generate in the
Mhm.
security space? And then how many clients should they typically have if they are targeting, like, large, mid, or small businesses?
All right, good questions. So I'll take the second part of the question first. So things are changing.
Mhm,
And I don't know how fast they're going to change, but every day I look at all the new deals that come out. Granted, some of these are AI specific, not necessarily cyber specific, but I often see 50 to 75 million seed rounds. Okay. I've seen, and we've seen bigger, we've seen smaller, but Series A's, seen massive Series A's. So I still use the terminology pre-seed, seed, Series A, and it means different things to different people, but I think they're blurring very fast with AI. What I traditionally look at for a Series A, and I led a deal in a company called DataBahn back in right around RSA.
mhm,
Um, we look for about 1 to 3 million of ARR.
mhm,
And I'm just giving these are rough numbers, right? Just to throw a line in the sand. 6 to 10 highly referenceable accounts. I want to be able to call the CISO and spend a half hour, an hour with that CISO that has bought that product and understand why they bought it, how they're using it, what competitors they looked at, all of that stuff. And we want these companies to have technology that's in production at some level of scale. It's not in, some innovation closet somewhere in a large organization. So those are some of the initial things we look at for Series A. Remind me what the first part of your question was.
um like you mentioned about like so I guess uh the bench, like how do you separate one Series A company versus the rest?
Yep.
Like, so for example, Huntress or like versus like their competitive companies in a similar landscape, like how do you kind of like evaluate besides like, obviously there is some sort of like mutual connection that it kind of like vouch for them. And then maybe we'll talk about the process of like you invest in them as a Series A investor. Like how long does it take? How many calls? Like what does the diligence process look like within the firm? Like, how do people kind of process the
Mhm.
deal like internally?
Yeah, with founders, it's interesting because you have different buckets of founders. You have first time founders. Some of them are very young. Some of
Mhm,
them are seasoned, they've been operator, they're seasoned folks. They could be in their mid 40s, right?
mhm,
So there's a wide spectrum. There's also a spectrum within cybersecurity. Most founders are very technical,
mhm,
right? What I found is the more the older the entrepreneur is, the more experience they have outside of just being technical, and they have some go-to-market experience. But when I look at a Series A, I look for not only the technical piece, that's kind of table stakes, but
mhm,
I want to understand, do they understand go-to-market? Do they know how to, and again, it's early days for these companies, but do they have that instinct on how to explain what they do? Technical founders typically have trouble explaining to a non-technical person what they do, the problem they're solving, how it's being solved now, how they're going to solve it differently and differentiated. And they have problems with that. So I kind of over rotate on, do they have some go-to-market DNA? Um, I've invested in companies like I mentioned the one before, DataBahn, where the founders are more mature. They understand channel really well. Channel is a force multiplier. A lot of my first time younger founders, they don't understand how to engage the channel, and it's very difficult. It's mostly all direct selling, top down, etc., and they don't understand how to leverage the channel. The reality is in cybersecurity, and I forgot the exact number, but it's almost a majority is done through channel players, whether it's VARs, resellers, MSPs, you name it. So those are some of the things I look at. As far as our process, we have a pretty disciplined internal process. The way we start is, getting back to, we start building the relationship with the founders. We introduce the company to our team. If we think there's a there, we introduce it to the team, and we have 14 investors, all focused broadly on the convergence of cyber and AI. So everyone's got an opinion, everyone's got a unique perspective, and it's a good way to kind of say, is there something here, or is this one of 20 companies, like I mentioned earlier, that each category is very deep with new companies. And from there, we spend time with the company, we spend time with their customers, getting back to what kind of ARR, what number of customers do we look for, and really understanding the differentiation and how the technology works, the TAM, all that stuff. We already know all that stuff. We have to do a little research there, but we know that stuff. It's really trying to figure out, can I work with these founders? Because the reality is, you come in a Series A, you might be on a 10-year ride with this company, before an exit. In any event, it's going to be a long time. And if you're on the board and everything, you want to be able to know that you can work with them, that they're coachable. So there's a lot of, again, there's personal stuff and relationship stuff that matters there just as much as the technology in the market.
I wonder, so what kind of ownership do you typically target? So do you lead, or both lead and follow? And then how do you think about follow on runs?
Mm-hmm. We like to lead or co-lead. Ownership, we used to have specific targets, but the reality, and this is everyone quotes me at my firm for saying this, every deal is a snowflake. So every deal's you look at so many deals, they all have uniqueness to them. So for us, we care about ownership, because if we're going to be rolling our sleeves up and doing the hard work with the company, we want to have material interest in it. But the reality is, successful companies have strong syndicates. It's not just one dominant investor. So we take the mentality of having multiple, whether it's a strong co-lead, strong syndicate. To me, we all have varying networks, varying relationships, and being able to bring all of those to bear for the founders is very important. So that's kind of how we look at it. And then follow-ons, we reserve money for each of the deals we do. The reality is, some companies do well, some kind of flatline, some just fail. That's the nature of the business we're in. So what I say, our reserves are earned. It's not a right. We could write it down. This company has X amount of million in reserves, but they need to earn those reserves. And if they earn them, we'll follow along. So for instance, with Huntress, we've done every round. We've put money into every single round. And to this day, we're the largest shareholder in that company.
Wow. How do you think about, since you mentioned about some of the founder are more it's a first-time founder versus some are not. What are some benchmark that you're using for the first-time founders? Because I feel for the second-time founder, obviously there is already track record. How do you kind of judge the first-time founders?
Yep, that's a good question. It gets back into being able to judge people, and the only way to do that is to spend time with them. So I look at a few things for first-time founders. I look for, there's this, you can, and it's hard to explain, that there's the ones that are successful have this certain hunger to them. They really don't care how all the odds are stacked against them. They want to do something, and they're hell bent on doing it. The other aspect is, it's good for them to have a nuanced understanding of the cybersecurity market, and specifically the area they're addressing. Where sometimes where I get concerned, you have someone that was, was successful doing a B2C, app, and now all of a sudden they're in cyber. Well, cyber's complicated. You have to build trust, all that stuff I talked about. So that's the second piece. And the third piece is their ability, their coachability. Are they going to listen? Because, I'm not a former founder, so I don't have that background. But, I see, a lot of companies. I'm on the board of a lot of companies. And as VCs, we're able to pattern match. Sometimes it's, it's apples to oranges. But a lot of times I can look at one company and say, hey, well, I've seen these 3 other companies handle this situation this way. And you want the founders to be coachable. So those are probably the 3 broad buckets I look at.
I'm gonna do like a real-time examination. Like I don't even like, so basically, okay, so here's like the newest like YC batch companies. Like how do you kind of like evaluate the category they're building, and then if like the company have like you will actually do a double take?
Yeah, so if I went down, this is my real-time test. So first company, not our space. Second one, yeah, continuous AI pen testing, huge area. A lot of companies coming in, a lot of money going there. There's a 75 million seed just the other day. Let's see, zero trust authentication. Yeah, I mean, zero trust is an architecture, but it's a focus area for a lot of firms. Multi-factor, or I looked at that already. Firewall that controls access across AI and humans. I'd have to look into that one. I don't know much there. AI native Kubernetes ops. Obviously, if you're running containers, you're running Kubernetes, you need that. So yeah, we can go down the list, and like Okta for agents. So that's an area we haven't talked about yet, or agents, right? That's an area we
why don't we talk about agents? Because I think this is like a really big category.
Yeah. So, we're doing an event next week in New York City, and we're going to be talking ad nauseum about agents. But, we're looking at this, and we've made, I think it's unannounced. We've made a bet here in a Israeli company in agent security. There's a lot of companies popping up. And it's really, in our case, we looked at technical differentiation, how they're solving the problem. Mm-hmm. But it's very, very early with agents. And I would say, one of the things when we think of agents is you have to secure, there's integrations, they're doing autonomous planning, they have memory access, and then you think about all the identity aspects. Mm-hmm. So there's a lot of companies like Palo Alto just bought CyberArk, which is really more focused on privileged access management. But you have all these identity companies and then we saw a crop of companies that started doing what's called NHI, non-human identity, service accounts. And then as soon as agents, I swear it was this year where agents became part of our vernacular, now it's agentic identity. So when we look at agents, the market is very early, a lot of companies popping up. But this is remember I talked about the attack surface expanding. This is going to be massive expansion of the attack surface, and VCs like us are starting to make early bets. But when you talk to CISOs, CIOs, they're still trying to figure a lot of this out, and they're having some wins using broadly automation to automate certain processes, whether it's in the SOC. Or other parts of the security stack, but it's very early. But this is an area we are focused on.
For sure. Can we talk about the AI native companies versus non-AI native companies? What does that mean for you?
For me, that means they are building from day one. They have written their code, built their product, whether it's still at an MVP or it's something that's in production, but they've written it leveraging Gen AI to a certain extent, whatever extent that is, as opposed to companies that were started 5, 8, 10 years ago that just didn't have that luxury. and now are playing catch up to automate those products and compete against the crop of companies that are popping up. So it'll take time, but we're talking, it's like dog years in startups. Every month is like 7 months for a normal human. So things are happening very fast. But that's how I look at it. And at some point, as time goes on, everything will be AI native. But we're not there yet. Additionally, all the companies I've invested in the past, they're SaaS. They have a SaaS model. You look at the SaaS metrics, gross dollar retention, net dollar retention, all that stuff.
Mm-hmm.
Well, that's changing with some of the AI companies now. Some are more consumption based. Some are a combination of consumption, subscription, tokens. So I think how we traditionally, what we call seed A and B, that's changing. And the metrics we look at to evaluate these companies is also changing. I don't know where it's going to go, but we're definitely in a period of of change in both of those regards.
For sure. You mentioned about you guys recently invested in a company that's in the agent space. Can you share more about for example, especially when you're picking the Israel companies, I feel like it's is that 8200? I feel like 8200 is such a popular group of where the founders are coming from. When you're sourcing these deals, is there a particular place that people typically come from?
No, I mean, if you're investing in Israeli companies, yeah, 8200 is where a lot of the top technical talent comes from. And they've built an amazing ecosystem. I wish we could do it in the US, where you have these folks leaving the IDF, starting companies. There's angel investors that have been, successful entrepreneurs. And it becomes this I call it the self-licking lollipop. They've done an amazing job, but no, there's no specific geography. Again, we invest across North America, Europe, as well as Israel, and even in Australia as well. So for us, it really comes down to the specific founders and their backgrounds. And I don't really care what state they're in, what country they're in. That doesn't really matter to me.
When you're thinking about let's say going back to the agent aspect, if you have a mental market map, where are the where would be the 3 top subcategory that agents should apply itself
within security?
Within security.
Yeah, I think the number one, I think the main one, first of all, it applies across all of them. But I think where you're seeing a lot of traction, and these are conversations I've had with CISOs recently, is in the Security Operations Center, the SOC. So, think you have all these security tools, bringing telemetry, logs, etc. They're coming in. Ultimately, they're going to a SIM or to cold storage or to a data lake. So, being able to leverage it for data pipeline management, for detection engineering, all of that stuff that is focused on the SOC, I think is where they're seeing the most value today. But across data security, cloud security, agents are being used. Mobile security, security testing, pen testing. It's just a matter of maturity of how much they're actually if you look at it for a lot of these categories, let's say pen testing, a lot of people, a lot of practitioners still want a human in the loop or human on the loop. They don't want some autonomous, group of agents doing all this stuff and having no human oversight on it. I think that speaks to all the other categories, but over time, who knows? Maybe becomes totally autonomous, but we're not there yet.
I wonder, so since you mentioned about the SOC aspect, why I feel for SOC as a regular consumer, people heard about Vanta, right? The SOC 2 compliance related things. In the SOC category, like what are some stuff that are happening, and then why is it like such an important category?
Yeah, it's important because you traditionally have three levels of humans, tier one, two, and three, with three being like where the most difficult, challenging things kind of drip down to. Um, but the problem is you have an increasing amount of data that is coming into the SIM and ultimately into the SOC. That's why the company I mentioned before, DataBahn, they help drastically reduce all the noise because a lot of it is noise. You have if you're running CrowdStrike, Palo Alto, I mean, there could be 40 different tools all throwing you all the information because they're going to assume everything's important. It overwhelms the SIM, it overwhelms the SOC. So you need to be able to reduce that. And then you need to be able to dig for that needle in the haystack. And that's not a thing that humans do intuitively. That's something AI does very well. So if you're able to leverage LLMs, and then have that analyst as that human in or on the loop, you're able to triage that data a lot faster. And in security, it all comes down to mean time to detection and response. Because you're gonna, something's gonna happen. There's going to be malware vulnerabilities. So the faster you can identify that, the faster you can address it, the less your probability of having a security incident is.
I wonder, so like for, I guess like when you're go to market to these different categories, like what is like the most common way to go about it? Would it be like, let's call it data bomb selling it to CISO of what Atlassian or something? Like, I mean, how do you think about the go to market? And then should they target like, five big logo, or should they target like, you mentioned about like, separate yourself in different category, right? Like maybe we could use DataBomb as an example on like how they kind of like did the go-to-market.
Yeah, it's a combination of direct selling as
Mhm.
well as channel. And I mentioned,
Channel. Yeah, you mentioned channel is a really big thing. What?
yeah, channel is very big, and channel again, it could be an MSSP, it could be a VAR reseller, an MSP, it could be an SI, it could be you could go through one of the large tech companies, the Amazons, etc. But to me, that it's a force multiplier because think with direct selling, which you have to do, and it's more of a top down motion. You're spending a lot of time and cycles breaking into these accounts, usually with a good amount of competition.
Mhm.
But your bandwidth is limited, especially think a Series A company. You probably don't even have a CRO at that point. May have a VP of sales, small sales team. You raise your Series A, you start scaling that up,
Mhm.
and when you leverage the channel, you're able to sell. Like there's geography specific things. If you're selling in the Middle East, there's nuances there you have to deal with. If you're selling into Asia, into Japan, there's other nuances. You probably want to work with an NTT in Itochu, or what have you in that region of the world. You're going to give up some margin, of course. You're going to give up some points, but you're able to force multiply your sales. We also have companies that they may augment their top down with a bottoms up, more of a PLG motion. What I at least in my experience, I haven't seen a PLG by itself work. You need to augment that with a top down, and kind of sandwich the sales that way. But that's kind of how we look at it.
I wonder, I think that's super helpful. And I wonder, like, when you are thinking about asking the question to the founder or their customer, like, I guess, like, how many customer call would you feel comfortable to like go for a company? And then what kind of things are you looking to hear from these, like, what would be the question you ask for, whether it's like Huntress, like customer, or like data bomb when they were like at the beginning?
Yeah. So if let's say hypothetically they have 10 customers,
Mhm,
I'd probably want to talk to the 5 biggest accounts,
mhm,
just ARR wise. And some of the questions I ask are, how did you find the company? What competitive process did you have? Was it a bake off? Did you already have an incumbent in there? And if you did, what were they doing wrong? Or what were the issues? And why did you pick this specific vendor? Another question I ask too is, you know, you're a $5 billion market cap company. Why are you going to solve a critical cyber problem with a company that hasn't even raised the Series A yet? These are fragile companies. Who knows what's going to happen to the company? And you find a spectrum of CISOs. Some of them love meeting these early companies and really taking a chance and almost becoming a design partner, helping them evolve the product. And then the other end of the spectrum is no. If Palo Alto Networks solves that, and the solution is not as good as the startups, but it's good enough, I'm just going to go with that. So we try to ask all those questions to understand why they bought it, why it's differentiated, and ultimately why they'll keep using it. Because one of the worst things that happens for our companies is they land some amazing accounts, and then for whatever reason they churn in a year, depending on how long the contract is, and then that starts eating into getting bad SaaS metrics. So
um, like, what is the go-to-market? Like, I guess, like, where do the customer meet these people? Is that just at RSA, or like, I feel like another question I had was like, why is RSA such a successful conference, and then they're like ranking the top 10 security startup every year? Like, how do they even rank them? Like, is that just like the VCs who are going, just like nominating their like startups to be like RSA top 10, or like what is going on there? Like, obviously I feel like also like whenever I go to the RSA side event, I've never actually been to an actual one, but when I went to the side event, it was like filled with, it's probably the best, I would say, like hospitality event I went to, like
mhm.
combination wise, because it was like a very curated, and then it was like a very, even the side events were like, I would say most like well planned it. Why is that? Like, I know security is a really big category. Like, yeah, like, and where, I guess, like, where do people even sell security product beyond, I guess there's Black Hat, and then there is the, is it DEF CON? Yeah.
Yeah, DEF CON. Yeah, there's a lot of there's a lot of regional, smaller cyber conferences.
Mhm.
RSA, as you mentioned, is that's kind of, I call it the Super Bowl, because that is the biggest event. Everyone goes to it. It's chaotic. If you go onto the floor, just go down to the floor of the Moscone, and that's when you realize there's way too many products. There's just way too many companies, way too many products. That's a whole nother discussion.
Mhm.
But for the ultimate buyer, whether it's the CISO or someone on their team, a lot of time they have their own networks. They have their own Slack channels. They share intelligence with each other. They talk to VCs. We have a lot of CISOs in our network, so they'll ask us, "Hey, have you seen this company? How do I solve this problem?" And vice versa. It's a two-way road there. And then for like the later stage stuff, they'll go to the Gartners of the world. For the earlier stage, there's a lot of good analysts out there now. There's Ed Amoroso and Tag Cyber. There's Francis Odom, and his company. So there's a lot of analysts that are starting to look at earlier stage and really help educate. Because imagine you're a vendor trying to get the attention of a CISO that has who knows how many cold emails and phone calls and ambushes they get a week. It's like they're overwhelmed. So when we meet with companies, we'll do executive briefings. We ask the CISO and their team, what are your major problems? Here's our companies, here are portfolio companies. If we have companies that solve those, we will give you 20, 30 minutes with each company, and you can really dig in, as opposed to just opening up my jack and say, oh, look at all these companies. Wait, why don't you start talking to these guys? Because they're just overwhelmed. But it is, RSA is the great example of there are too many companies solving the same problem, and that's just the nature of this business.
I have one last question, and so I think let's say if I'm a security startup, how should I reach you? So, among the companies that you have invested, are they all just warm intro from other VCs or existing portfolio companies, or how do they first came to you in the first place? And then I think you started your current venture maybe 4 years ago or so, through I guess oh no, actually 7 years ago. Sorry. My bad. So before you have your first deal, where do these people come from? Because I guess how do you kind of ensemble the network? And I was coaching a lot of founders, and then a lot of people are curious about how do they even get on the VC's radar? Because I feel like the code DM or something, it's very hardly gonna work.
Yeah, no, it's what I recommend is with most of my companies I've invested in, it's a lot of them have been warm intros. And again, getting back to trust, if I have someone I know and trust introduces me to a founder or co-founders, I'm going to take that call and I'm going to meet with them. But I get hit up all the time on LinkedIn. It's funny because a lot of them aren't even cybersecurity related companies. I guess they don't read my profile, but you could reach me over LinkedIn, and I'm always checking my messaging there. But really, if you're especially a first time founder, second time founders have networks already, and if they were successful, it's usually a lot easier to raise money. But for first time founders, I would try to do your homework. Hey, I want to talk to Ernie at Forgepoint. Do I know anyone he knows? Do some LinkedIn research. If you don't, reach out over LinkedIn messaging, and give an explanation of, hey, this is who I am. This is what we do. Very briefly, we'd love to do an intro call. And we're always doing intro calls with founders, and the company may be too early, they may be too late, they might not be a fit. We may already have a company in that category, so we won't invest there. But I think if you can figure out a way to get a warm intro, that's always the number one option.
Love that. How do they get into the first warm intro back then, if they don't know anyone?
I would just reach out over LinkedIn, like I mentioned, and just go to connect, put a message. This is my own technique. Anytime I connect with someone on LinkedIn, I write a message. Part of it is because I want it to be personal. Part of it is if I don't talk to that person for 3 years, I want to know how I met them. You're at a conference, you run into people. So put in a message. Hey, this is who I am. This is what we're doing. Would love to find 30 minutes to have an intro call. And, we can go from there.
Love that. Well, Ernie, thank you so much for coming on the show. Oh, actually, 1 minute fire round. What's your favorite book?
My favorite book. Well, since I have a lot of favorite books, I'm going to give the one that's most applicable to my industry, which is Countdown to Zero Day, which is the story of the Stuxnet virus, which drastically delayed the production of Iranian their nuclear program back in roughly 2008. And it's a book by a woman named Catherine Zetter, and it's an amazing book because it shows how cyber affects the physical world. Because a lot of times cyber just affects cyberspace. But in this case, I don't want to ruin it, and I think most people know the story. But it's a pretty cool story on cyber affecting physical things and affecting national security. And the one thing I always say is cybersecurity is national security and vice versa, because if you go to take money out of your bank and you physically or cyber technically cannot get into the bank. I had to drive home for this podcast because we lost power in my office, and you're kind of dead in the water. So Cyber affects the physical world, and it does affect national security and our critical infrastructure. So anyway, that's my favorite book on cyber.
Love that. Who would you invite to a dinner party?
Who would I invite to a dinner party? Do they have to be alive?
It's your party.
Wow, that's a tough one because there's so many people I'd want to invite. That's hard to answer. That's hard to answer because there's so many people I would choose. But you want me to pick one person, right?
It's your party. You can.
Elon Musk. Elon Musk.
Oh, I feel like he's such a popular guest on our show.
Yeah, it's just, there's so many rabbit holes you could go down talking to him.
Yeah,
I just think it'd be very interesting, and he's got a good sense of humor.
for sure. Who made the biggest impact in your career?
The biggest impact. Which career? My venture capital career, or any of my careers? Yeah, I would say for me in venture capital, it's definitely my two co-founders, Don Dixon and Alberto Yepes. They're the ones that took a chance on me, have mentored me, and gave me a shot in this industry, which I never planned on getting into.
Where can we find you outside work?
You can find me surfing.
Oh wow! Okay,
My hobby is whenever I'm not with family or work, I try to get to the ocean and surf.
love that. Well, Ernie, thank you so much for coming on the show today. It was such a masterclass for security tech.
I appreciate you having me. Thank you.
Shout out to Daniel for like going through like some like commenting basically. Let me